Welcome back, and we are now seeing a giant red flag potentially having to do with Bitcoin and MicroStrategy. Predator on X said this clip is a giant red flag. Proof of reserves may compromise your privacy, but overall it does not compromise the security of your coins. Michael Saylor either has something to hide or he's completely ignorant about how Bitcoin works. Now, this is all in response to this video that is coming out of the Bitcoin conference, where one of the attendees asked Michael Saylor if they are going to basically publish their proof of reserves. And if you guys are not aware, proof of reserves is basically the Bitcoin wallet addresses so that you can go on chain to validate that the coins are actually there, that the coins that they say they own, 580,000 coin, are actually there. Well, Michael Saylor's response is not really surprising to myself, probably many of you either. But I think for a lot of investors in MicroStrategy that are not seeing the risks, and I've published a lot of information in my videos about MicroStrategy and how there is a lot of risk there. And the MicroStrategy maximalists don't necessarily see that. Now, I'm not saying Michael Saylor or MicroStrategy don't have the coins they say they do. But when we're asking the question about proof of reserves, this is one of the benefits of the Bitcoin network. And so that's what we're going to be discussing in today's video, the giant red flag, which is the lack of proof of reserves of these coins and what this actually means. And especially if you are kind of a newer investor, it is really important that you understand these risks. And this is what we talk about on this channel: where to invest, when to invest, how to invest, all of that. We try to learn every single day. So make sure you guys are subscribed to the channel. Give the video a free thumbs up, because remember, crypto is not free, but thumbs up are always free. Anyway, let's get right into it. So as I showed you, Predator posted this. Now, basically, this is the video. So this guy, Mitchell, said, I asked Michael Saylor if MicroStrategy has any plans to publish on-chain proof of reserves. His answer will shock you, saying it's a bad idea. Now, we're going to watch this shorter clip, and we also have a longer clip to show you, because basically that same user on X said the full video is even worse. But before we get to the full video, let's start with just the question of proof of reserves being asked. Again, I think this was like day one of the conference or something like that, the Bitcoin conference at the end of May into June of 2025. Let's listen in.
Hey, it's Mr. Saylor, huge fan of everything you've done. Does Strategy have any plans to publish their on-chain proof of reserves?
Yeah, proof of reserve. It's an interesting thing. Let me make the following point. A lot of people learn stuff from FTX and Mt. Gox, but I'm not sure they learned the things that the institutional community needs to learn going forward.
Pause. Now, I just want you guys to think about what the question was, and are we getting an answer here? And we're going to come back to this FTX learnings that Michael Saylor is talking about in just a minute.
The way the current conventional way to publish proof of reserves is an insecure proof of reserves. It actually dilutes the security of the issuer, the custodians, the exchanges, and the investors. It's not a good idea. It's a bad idea. It's like publishing the address and the bank accounts of all your kids and your phone numbers of all your kids, and then thinking somehow that makes your family better. It doesn't make your family better. So no institutional grade or enterprise security analyst would think it's a good idea to publish all of the wallet addresses such that you can be traced back and forth, and every future transaction can be traced. I would say go to AI, put it in deep think mode, and then ask it, what are the security problems of publishing your wallet addresses, and how might they undermine the security of the company over time? It'll write you a book. It'll be 50 pages of security problems. So the problem with proof of reserves, the way that people do it right now, is it's first of all, it's a proof of assets that is insecure, and it is not a proof of liabilities. And so if you really want crypto security.
All right, so we're going to watch the full video in just a few minutes because I think that it's important that we take this into context, right? Whether you think that MicroStrategy is a good investment or not, whether you're holding it, whether you're trading it, whatever your opinion is, I don't think it really matters because as I've explained, Bitcoin is what is moving based on what MicroStrategy is doing. And so if there is concern here, or if let's say you believe that they have the Bitcoin, right? Then you should still be asking the question, why are they not proving their reserves or at least showing the balance? Now we're going to get into why they probably will not do that, or what some reasons and what he was talking about with some of the security reasons there. But let's be clear, guys. They have about 580,000 Bitcoin, and they probably are going to continue to increase this number. But Satoshi's wallet has 1 million Bitcoin in it. Michael Saylor's MicroStrategy wallet, there's probably hundreds and hundreds of wallets. It's probably not all in one wallet. So to actually get through and steal or take or hack or whatever you want to call it, MicroStrategy's Bitcoin, you would have to do this probably with hundreds of wallets. Satoshi has 1 million Bitcoin in one wallet. The public knows the wallet address. You can go and just type in Satoshi's wallet and you will see the wallet address. This is literally the incentive to break Bitcoin. Nobody has been able to do it just yet. Everybody knows the wallet address. Everybody knows it has 1 million Bitcoin in it. Everybody knows the minute that the money moves from that wallet, the price is probably going to plummet because that means that almost 100% the network is compromised because it doesn't seem like Satoshi is going to take any of that 1 million Bitcoin that are in that wallet. Those are really believed to be gone forever. Even if you think, well, Satoshi wouldn't just leave the network with no money. He probably had other Bitcoin and other wallets, right? But the Satoshi wallet with 1 million Bitcoin has been untouched. And it is literally the incentive to break the network. It is the bounty on the Bitcoin network. And it has never been, there's never been an issue. Now, that doesn't mean there can't be in the future, but there hasn't been yet. So again, what Michael Saylor is saying here, you guys have to understand, like, this is part of Bitcoin and the whole crypto market as well. And so you have to understand this because MicroStrategy, in my view, is a risk this cycle. And to what Michael Saylor said at the beginning of the video, where he said, you know, the learnings of FTX. One of the learnings of FTX was that they had no Bitcoin. When they went bankrupt, the day they went bankrupt, they had 0 Bitcoin. They had a lot of Solana, a lot of FTT tokens, coins that they were pumping, but they had 0 Bitcoin. That is why proof of reserves is important, because if we would have known that, they probably would have gone under way earlier. And so from an institutional standpoint, we should be asking the question, where are the Bitcoin? Show proof of reserves. And guys, I don't know whether whether MicroStrategy has Bitcoin or not. I would assume that they do because they are regulated. You know, a few days before I made this video, this is a report from the SEC website that shows that they raised money from, they raised basically $350 million by selling shares in the open market, at the market, I should say. They sold Strike, which is their perpetual offering, they got $68 million, and then Strife is another perpetual offering, $10 million. So $427 million, and then they rolled it into Bitcoin. And so this is being sent to the SEC. But I was thinking, like, there's some people who are theorizing that MicroStrategy may have paper Bitcoin. What is paper Bitcoin? Effectively rehypothecated Bitcoin. This was the whole conversation around what Strike was doing with Strike lending just recently. And Jack Mallers had to come out and say there's no rehypothecation on our end, but maybe the third party may rehypothecate. And then he came out a few days later and said there's going to be no rehypothecation. And so there is the potential that they're behind the scenes, they're lending the Bitcoin out or they're doing other things with the Bitcoin. I also thought, like, how would MicroStrategy be able to buy, like, quote unquote, buy Bitcoin without being able to show the proof of reserves? One theory is that maybe they're buying Bitcoin through the Bitcoin ETFs because technically the ETF share is underlying Bitcoin. And so technically that could be part of it. But that's not what they're saying they're buying. They're saying they're buying Bitcoin directly. And so what is proof of reserves? By the way, the Bitwise ETF, this is on the screen right now, they have right now $4.2 billion worth of Bitcoin in the ETF, and they have every single one of their wallets listed on their Bitwise website. So again, we have Satoshi's wallet, we have Bitwise's wallets, we know Tether has billions and billions of dollars in Bitcoin as well. You can go to their website and you can look at all of the specific addresses for each individual network, go onto the explorers and look at what is there. And so this is the benefit of Bitcoin and crypto. And this is what the basically the like Bitcoin maxis have been pushing for so long about Bitcoin, that it is transparent, that you can prove that you have what you say you have. If you think about, some of the banks that blew up or hedge funds that blew up, or that were Ponzi's, right? It was just they didn't have the money, right? They couldn't prove what they said they had. This is what blockchain does. It removes that veil of secrecy, and it allows the public to say, okay, you say you have it, we need to see it. And the fact that Michael Saylor, right, the biggest Bitcoin maxi ever, is not going to publish proof of reserves, it doesn't make sense. Now I understand that probably they're like engineering and back-end security is saying, it will make it easier to access the Bitcoin, or socially engineer, some of the financial firms, take the bit. But guys, like, you can't be a Bitcoin treasury company and not be able to show your reserves. I just Binance shows their reserves on chain. They show their wallet addresses. Kraken, same thing. And so these are thousands and thousands, tens of thousands of Bitcoin, hundreds of thousands of Bitcoin potentially, in aggregate, along with the Satoshi wallet. And there has never been any issues. This is the security of the Bitcoin network. And so it is a red flag. It is definitely a red flag. And it's even a bigger red flag because they're buying, quote unquote, buying all the Bitcoin with money that even Michael Saylor says he can't afford to lose, because they're doing it through debt and through debt issuance, right? We've seen this. 42 billion in equity, 42 billion in fixed income through convertible notes. And so, yeah, there's definitely a lot of questions. Now, here's the deal. Arkham Intelligence have already supposedly identified MicroStrategy Bitcoin holdings pooled with Fidelity. This was from last year in 2024. They said roughly 107,000 Bitcoin of MicroStrategy holdings appear to be pooled with Fidelity custody, while 79,000 were held in segregated custody, including Coinbase Prime. And if you go to the Arkham website, you can actually see those wallet addresses that they've tagged. Now, whether these are or are not MicroStrategy, you can see that there really hasn't been any updates in quite a few months, even though we know they've been purchasing in the last few months. And so there is potential that we know where some of the Bitcoin is, which is good, because then at least we know that there is Bitcoin in play here, and it's not all just paper Bitcoin, or that would be really bad for the entire crypto market, guys. We would see a negative 60% drop across the board, some 99% drop. Literally, you wouldn't even be able to log into your crypto account. You would not be able to log into your crypto account. And so everybody needs to understand whether they have the Bitcoin or not, because now I think that it's added more concern just hearing at a Bitcoin conference that it's not secure, and posting a public wallet is not secure. Like, this is, and he's also said that you would be able to see the flow of funds. Well, if they're not ever planning on selling the Bitcoin, why would they be concerned with the flow of funds? Well, if they start lending the Bitcoin, and maybe not telling us that they're lending the Bitcoin, or they don't want to tell us who they're lending it to, because remember, with FTX, the learnings from FTX, Celsius, Voyager, Terra Luna, Three Arrows Capital, BlockFi, and FTX, they were all borrowing and lending to each other. So one would get inflows for the debt, and then they would lend it to another company, and then the other company would borrow it and then lend it to another company, and then they would borrow and lend it to another company, and then eventually the lending and borrowing would get back to FTX, and FTX would then borrow and lend effectively their own money originally. It was a loop of borrowing and lending and over leverage. And so if that starts to happen, which it might, maybe he don't want us to know where it's going, because you would see it flow from one company to another. Because remember, it's not just MicroStrategy now. We got MetaPlanet, we have Marathon Digital, we have 21, we have Nakamoto, all these different, and potentially GameStop, all these different companies buying Bitcoin with debt and convertible notes that are going to be paid at some point in the future. All I know is that over leverage brings the market down every single time. And since the beginning of 2025, I've told you guys the risk right now is MicroStrategy and all of these Bitcoin treasury companies. That's the risk for the market, because any little hiccup, it's going to plummet Bitcoin, and then the altcoins are going to plummet even further, harder, and faster. I hope it doesn't. I really, really hope it doesn't happen, guys. But this is a huge risk. Huge risk. So anyway, Predator said the full video is even worse, saying if you publish your wallets, there's an attack vector for hackers, nation state actors, even type of troll, every type of troll imaginable. It just creates so much liability. You should think twice before you ever do it. And listen, I'm not saying that I don't agree with that there's potential security risk here. But if Arkham already identified these wallets, like maybe show us half of the Bitcoin or show us all the Bitcoin and then have it moved within the exchange's pooled Bitcoin. I don't know. All I know is these guys get paid a lot more to figure these things out than many of us probably ever will get paid, right? Anyway, let's listen to the full video. It's about 7 minutes. We'll play it a little bit faster. That way it's not the full thing. And then we'll kind of wrap it up and let you guys know what my final take is on this, because this is the first time I'm watching the full video with you guys live. So I can give you guys my real full opinion on the full video. Let's listen in. And don't forget to give this video a free thumbs up. Hit the subscribe button. That way you never miss a new video. Let's watch. Take it away, Michael.
A lot of people learn stuff from FTX and Mt. Gox, but I'm not sure they learned the things that the institutional community needs to learn going forward. The current conventional way to publish proof of reserves is an insecure proof of reserves. It actually dilutes the security of the issuer, the custodians, the exchanges, and the investors. It's not a good idea. It's a bad idea. It's like publishing the address and the bank accounts of all your kids and your phone numbers of all your kids, and then thinking somehow that makes your family better. It doesn't make your family better. So no institutional grade or enterprise security analyst would think it's a good idea to publish all of the wallet addresses such that you can be traced back and forth and every future transaction can be traced. I would say go to AI, put it in deep think mode, and then ask it, what are the security problems of publishing your wallet addresses and how might they undermine the security of the company over time? It'll write you a book. It'll be 50 pages of security problems. So the problem with proof of reserves, the way that people do it right now, is it's first of all, it's a proof of assets that is insecure, and it is not a proof of liabilities. And so if you really want crypto security and you're maxi about this, my suggestion is buy Bitcoin, self-custody your Bitcoin. It's pretty freaking obvious, right?
Michael Saylor just said what I have been saying on this channel from the beginning of the year and probably since last year. Don't buy MicroStrategy. Buy Bitcoin. That's literally what he's saying. And so this may be the strategy and the thesis, because remember, they still have a lot of runway to go when it comes to how much money they can take out, and specifically how many shares they can sell ATM at the market, which is basically flooding the market with new shares. Now, some of these shares may be going to some institutional investors like BlackRock and Vanguard, but either way, when you increase the circulating supply of shares and you keep the market cap the same, the price goes down. You're diluting every other shareholder. Now, the idea is that Bitcoin goes higher, so then the MicroStrategy stock will go higher as well, even though they're selling shares in the open market, but that's not what we've seen happen. As they've been selling shares in the open market, the price has stabilized, and it's still trading at a premium to the underlying quote-unquote Bitcoin per share. But either way, the superior trade is not MicroStrategy. The superior trade is just buying the Bitcoin, because MicroStrategy is the risk. Michael Saylor is trying to say that, well, let me retract that. MicroStrategy is the risk, but Bitcoin is going to be a victim if the risk plays out bad, right? If they don't have the Bitcoin or if they start selling or whatever the situation is. But he's telling you, like he's literally just said, go and self custody your own Bitcoin if you want to know that the Bitcoin is actually there. So maybe this is him letting retail know, like, don't buy MicroStrategy, because he can't say that. He can't say, if you're a retail investor, stop buying the stock. He's the CEO or the founder of the company and he's on the board. He can't say that. So basically, what he's telling us without saying it is, don't buy MicroStrategy, buy the Bitcoin. This is exactly what I've been saying since the beginning of the year, because Bitcoin will benefit from MicroStrategy continuing to purchase and going in debt, even if MicroStrategy blows up and has to be, restructured all their debt and they have to be bought out by other companies. It doesn't matter. The Bitcoin is still going to be there, right? And he's trying to make MicroStrategy too big to fail effectively. And I think that MicroStrategy is there already. Like at this point, under this administration, at least, if MicroStrategy was not able to pay the debt off, or if Bitcoin were to crash to $10,000 and they got margin called effectively, I don't think that they would be allowed to fail. I don't think MicroStrategy would have to liquidate. I mean, they may have to liquidate some Bitcoin, but I think that they would be bought up by other companies. Hence, when you look at the institutional holdings of MicroStrategy, over the last few months, we've seen some of the big players like BlackRock increasing their shares. One, I don't remember which financial institution, but they increased their shares from like 2 million shares to 12 million shares in one go. And so that may be what's going on here. Like this may be the institutional play to acquire Bitcoin, the government play to acquire Bitcoin. And this is not for you or I. You or I should be focusing on the underlying asset, which is what MicroStrategy is going to pump effectively. But he's letting you know, like, I'm not going to tell you the proof of reserves, and I'm going to keep selling shares in the open market. So if you're holding the stock, it's probably not a good thing. Plus the fact that back in 2023, he sold literally all his MicroStrategy shares. Now he has more. He has about 20 million shares. Is he going to sell those? I don't know. Potentially. Let's continue listening in.
You should own the Bitcoin yourself if that's what you want. If you're going to be a securities investor, okay, if you invest in securities, what you want is an institutional grade proof of assets and proof of liabilities with them netted out, okay? And the best practice of that is not to publish the wallet. The best practice of that would be have a Big Four auditor that does an audit that checks to make sure that you actually have the Bitcoin. And then you also have to check to make sure the company hasn't rehypothecated or pledged the Bitcoin or entered into any debt or credit obligations where the Bitcoin is pledged. And you have to net those out, and you have to publish those, and you have to sign them as the Big Four firm. Then you have to wash it through a public company where the CFO signs, then the CEO signs, then the chairman and all the outside directors are civilly and criminally liable for it. And so if you really want the best practice for securities attestation, it would be a public company with a Big Four auditor with an audit subject to Sarbanes-Oxley in the United States. That's what my company is. It's much, much better than simply a proof of reserves wallet. At some point, I would say, I can see...
Let me pause here for a second, because what he just said kind of goes in line with what I was just theorizing. Like, because what he's saying is you get the big auditor, not just to look at what Bitcoin you have, actually physically have, but he said net it out on anything that's rehypothecated or lent out. So there's the potential that they are lending some of it out and that the net will look good, because think about it. Let's say, and again, this is just kind of thinking out loud and talking about potentials. This is not actually saying this is going on. But let's say they have actually just 500,000 and they're loaning out 80,000. Well, they put proof of reserves. You're going to see that the Bitcoin is flowing out. And so is MicroStrategy a liquidity pool for some of the big exchanges? Are they, kind of getting in the market and creating more liquidity for some of the Bitcoin ETFs? Like, you have to think about, there's the potential that that's going on. And whether they have to disclose that or not, I don't know. I don't know. I haven't read every single piece of MicroStrategy's SEC filings. It's just a lot. But that's what Michael Saylor's saying there. You hire the big auditors, and then they look at what you actually have versus what you're loaning out or borrowing or whatever. Like, whoa, are you doing any of that? That should be the question, Michael Saylor. Are you doing any of that, or is the Bitcoin you say you have, is that legit in your wallets? Like, have you verified it? Have you went on chain and looked?
Implementing some kind of proof of reserves, if you can come up with a zero knowledge proof that blinds everybody from being able to track the underlying wallets. But even then, you have to clear it with your custodians, your exchanges, your outside auditors, your risk managers, your officers, your directors, and think it through and make sure there's no security hole. But even if you did that, you still are missing the other half of the equation, which is, so you own 63 billion worth of Bitcoin. Do you have $100 billion of liabilities? Because if you've incurred 5, 10, 20, or $50 billion of liabilities via fiat contracts, the security's no good, right? And publishing a simple wallet that you can track is really just a crypto parlor trick. So,
Crypto parlor trick. I mean, it's really hard to read like what is the case, because he keeps saying tracking the underlying wallets, like he doesn't want those to be looked at. Because my view, and I think that most people think that MicroStrategy, if they hold Bitcoin, that they're just holding it, that's just sitting in a wallet, right? And that may not be the case. The same way that, like, if MicroStrategy owned a piece of property, they could rent it out, they could loan it, somebody could lease it for 5 years, and then they're going to get it back. Do they have to report all of that in their SEC? Do they have to go out and publicly state that? I don't know, right? And I'm not saying that they would be doing this with all of the Bitcoin, but even if they do it with a small portion of the Bitcoin, I think that's the ultimate goal, right? That they're not just going to sit on the Bitcoin, that they're going to do things with it eventually. Once they are, they are the largest holder, but once Bitcoin really becomes more integrated into TradFi globally, right? So it's very hard to read whether he just thinks it's a security risk to list the wallets, or whether he doesn't want them to be looked at because they are at some point being rehypothecated, where the risk level is so low, because remember, their dollar cost average right now is about $70,000. So they may have, strategies where they can, every, when it hits $100,000, they have the margin where they can loan out 20,000 of these Bitcoin, where the risk is very low and the reward could be potentially very high. I don't know. I don't know what their whole business strategy and thesis is. And again, a lot of people start theorizing all these different things because the fact that they don't just see the Bitcoin, and that he's not just giving a straight answer. Like, if he just would have said, no, we're not doing it because there's too many security risks that we can't go into right now, I would say, okay, fair enough. Fair enough. But now he's talking about, well, you would have to hire a big auditor so that they see how many Bitcoin you have. And then if you have liabilities, and if you have too many liabilities, then the Bitcoin's not worth anything. It's like, wait, so do you have liabilities besides the convertible debt? You know what I mean? Like, that's my question as I'm hearing these things. Anyway, let's continue listening.
I get why people like it, and it's sort of interesting if you have an exchange. But let me tell you, the real lesson you should learn from FTX and Mt. Gox is, don't do business with shaky offshore exchanges run by juvenile tweakers.
Okay? He's not saying that they were obviously running shady business, right? But he wasn't saying like what they were doing was wrong. He's saying like they were not the right people for that job, right? Because FTX was loaning a lot of their Bitcoin out. Maybe Coinbase is doing this too. I don't know. But FTX was definitely loaning and borrowing and lending and borrowing and trading the market with customer assets, right? The loaning and borrowing, I think, was somewhat okay, but once they started trading with their customer funds, not like fees, and supposedly they were worth billions of dollars and they were making so much money, but meanwhile they were using customer funds, not the money that they were supposedly worth. And so he's saying, like, don't deal with those shady exchanges, like deal with us. And so he's kind of saying, like, that's what they're doing, right? Potential rehypothecation or lending. Because the thing is, lending is starting to become big on with Bitcoin, and then Bitcoin liquidity. Where's all that Bitcoin coming from, right? Where is all that Bitcoin coming from? I don't know. It really got me thinking when he said that. I'm like, wow, this is a bigger risk than we thought. Because I'm not saying that this is going to blow up, right? But it is a risk, because even if it's not now, what if it's in 2028 when some of that debt is due, right? And what if other companies start doing this, which they are? And they're all doing basically the same thing. And so if they are rehypothecating or loaning out some of that Bitcoin, that means they're all going to be doing that because they're all following the MicroStrategy strategy. And that, I think, is a risk because, again, it goes back to what we learned from FTX. They were all borrowing and lending to each other. And granted, the banks do this too. This is why the banks don't have any of your money, right? If crypto becomes digital finance, it will. But this is supposed to remove, blockchain is supposed to remove that risk by being able to prove, yes, we actually have this Bitcoin. Yes, it's in segregated custody, but the fact that he's not willing to do that and keeps saying all this other stuff about it, it just, I don't know, it makes me worry a little bit more. And again, I'm not really a holder of MicroStrategy at this point, but it makes me think what's going to happen to the whole market, because the market has priced all of this in. And if there's a risk with loaning and borrowing, I don't know. Let's continue listening.
If you're a crypto person, hold your own crypto. And if you're an institutional investor, let me tell you, I've had institutional investors since 1998, so I go back a ways, right? 27 years. Institutional investors would laugh at me if I said, look, here's a bank account that has $100 billion in it, or here's a wallet that has $72 billion. And they're like, well, what about the liabilities on the balance sheet? I'm like, well, don't you worry your pretty little head about that. That doesn't matter. Let's just pretend we don't have any. They're like, yeah, right. So at the end of the day, a securities investor wants to see an audit. They want to see the 10K, and which is very important, and then they want to see the Qs. And they want to see, and by the way, they want to see it from a U.S. company. You wonder why is it that people trust U.S. companies? Because of Sarbanes-Oxley, because you go to jail if you lie. You have civil and criminal liability. It's much stronger than the protections in other countries. Always has been. So, I would just say don't fall in love with your proof of reserves thing like somehow that's, God's gift or the solution. It isn't. It won't protect you from a meltdown. And then don't think that that's critical for securities. What is absolutely critical in the securities market is that the CFO, the CEO, the outside directors, the outside auditors, the risk managers, all be trusted, right? And that's what an institutional investor that puts $1 billion into a public company is going to be thinking about, and they'll obsess over that. That's why, for example, there are a lot of things where we can't do them, like we can't engage in capital markets activity until we file the 10Q, which is a very critical legal point, or there are a lot of things where the cadence is dictated by the 10K, right? Because if a company can't file a 10K, it means that its auditors won't sign off on its books, which means it technically maybe is insolvent. And so when you're looking at a public company that misses a 10K filing, that's a massive red flag, and that matters, 100x more, 1,000x more than can you show me a wallet that has a certain amount of Bitcoin in it. I personally think there's a lot to be worked out there. You publish your wallets, that's an attack vector for hackers, nation-state actors, every type of troll imaginable, and it creates so much liability that you should think twice before you do it.
Now, I don't know if you guys caught it, but Michael Saylor said, posting the proof of reserves will not protect you from a meltdown. And so to me, that means if he posted it, there would be a meltdown because clearly the Bitcoin is not all there for whatever reason. Whether it's in many different custodians, maybe some of it is being lent out, maybe some of it is being borrowed. Like I don't know. I don't know what the answer is. I don't know why they're not posting the proof of reserves. I don't know why the Bitcoin maxis are not pushing back on this. And I don't know if it's going to matter. I really don't know if it's going to matter. I do know that it's a risk. And I do know that a lot of people in the MicroStrategy trade don't see it as a risk, but I'm not here to save anybody from their own investment decisions. I'm here to tell you guys what my thesis is on this whole situation. Here's the deal. Like Michael Saylor said, I do not think that holding MicroStrategy is the play. I think that this is what Wall Street is going to be investing in, as they have been. BlackRock, State Street, Vanguard, all the major institutional players are investing in MicroStrategy because they are the largest holder outside of Satoshi Nakamoto of Bitcoin, and they're going to continue to acquire and acquire and acquire and acquire. This is a risk for the rest of the crypto market, though. Even if you're not a MicroStrategy holder, I think MicroStrategy holders are more at risk because of the premium to the NAV and because we don't even know if they have the Bitcoin and the debt is to the creditors, not to you as a shareholder. And so there's a lot of risks, but I think that what Michael Saylor is saying is accurate. And he's saying what I've been saying for months on this channel. You should not be holding MicroStrategy, hold the underlying asset. The MicroStrategy trade is over, guys. It is over. The same way back in 2020, we were trading grayscale products because they were going premium to NAV and discount to NAV constantly. And so we were playing that ARB, but it was over at some point. There's a lot of people in these markets that they cannot move on. They just stay in one trade over and over and over and over. And they keep losing more and more. But I guess it's like an addict, right? They're going for that first high, right? Not coming again. So when you're thinking about these markets, you have to be able to move on. MicroStrategy, great trade. Now, maybe short potential, but not yet, for me at least. But it is something that we have to think about because at some point, Bitcoin is no longer going to be the trade for the cycle. It doesn't mean forever, but it means for then. Because all these companies are buying and buying and buying and buying and buying. But there's a potential that the buying will stop or the debt issuance will stop or slow down. Maybe not. I mean, there's also the potential that it's not going to. But we have to kind of figure out, is the risk worth the reward? In my view, the reward for MicroStrategy, buying and buying and buying, and all these companies buying and buying, the reward is in Bitcoin. It's not in the share of the company. Maybe in the early stages, right? We've seen Cantor Equity Partners, which is going to be 21, Jack Mallers' company. That stock went from like $8 to $40 overnight, and it's not worth $40, even in the new company. So there is potential to still make money with these in the trades, especially in the early days when they announce that they're going to be doing a Bitcoin strategy. But generally speaking, once everybody knows about the trade, it's no longer tradable, right? Buy low, sell high. Buy into the fear and sell into the greed. When nobody's paying attention to it, nobody's talking about MicroStrategy anymore, that's probably the time to invest. Same thing I told you with Yield Max. Last year, we were talking about Yield Max and MicroStrategy paying 10% every single month in dividends. Didn't hear a peep from anybody in 2024. Now, everybody's talking about MSTY. It's no longer a good trade because everybody's talking about it. Everybody figured it out. And so that is the greed cycle. That's the euphoria. That is the top of the market. Maybe not the tippy top, but it is an indicator that you are close to the top because everybody is in the trade. And so when everybody's in the trade, that's the time to get out and go look for the next trade that nobody's talking about because eventually, that cycle will reverse. And so I think Michael Saylor validated what I've been saying. Buy the Bitcoin. Don't buy MicroStrategy. That's not financial advice. That's just literally what he said, especially if you don't understand the full risk of MicroStrategy. With that, That is the giant red flag in the market, and potentially these Bitcoin treasury companies, and if they don't actually have the Bitcoin, or if they're rehypothecating it or lending it or borrowing, whatever, that could be one of the things that takes the market down. And like Michael Saylor said, just posting the proof of reserves will not save us from a meltdown. And with that, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit that subscribe button. Let me know what you guys think down below about it. Do you agree with me? It's like, it really shouldn't even be a concern for most of us because MicroStrategy is no longer the trade. So let them keep buying and pumping Bitcoin to oblivion. Go for it. Because I'm not going to be involved in strategies risk. I'll stay in the Bitcoin risk, right? With that, see you guys in the next video. Crypto on.